Hey, Carolyn. Hey, Adair. Saw NASDAQ hit target yesterday, Carolyn. Well done. Hope you're well. I'm a little bit early, so I'm going to give folks a little chance just digesting all that data we've had out of the US.
10 seconds.
Oh, Carolyn. Annoying, eh? I took a little move out of the S&P short yesterday as well.
Schmidt says currently Fed close to meeting its mandate, but policy must look forward. Rate cut was appropriate to offset risk to labour market. Recent data points to rising risks for the jobs market. Inflation is still too high. Current job market largely in balance. Fed policy is, quote, slightly restrictive, which is the right place to be. Going forward, he will be data dependent on monetary policy choices. And on supervision, Schmidt says supervision role is important for broader mission. Just a recap there, Fed Schmidt 2020.
Oh, very nice. Well done. You saw the DAX. It was technically nice.
Basis point rate cut last week as appropriate to offset the risks to the labour market, but he still notes that inflation is too high and the current job market is largely in balance. His categorization of policy stance is, quote, slightly restrictive, which he says is the right place to be, and he reiterates data dependence ahead for his monetary.
Nice sort of false break of that trend line, just dropping lower. Well then, I do like your trading, Carolyn. It's very consistent, very the same style. It's nice. Hey Ryan, see you, buddy. I'll be going through all this data dump in a minute. So I'm going to wait so I don't get going too soon. We've got a whole swathe of Fed speakers as well coming out, so we're not in a rush because there's going to be lots of probably choppy moves today. Hey Brian, good to see you. Gold getting a bit of a punch in the stomach from that data drop. We'll cover that in a second. I read your article on LinkedIn today, Brian. Just came across it, the one on your sort of trading experience. Very nice. I gave it a little like. Good article.
Just talking AI adoption by businesses has not been as big as you think.
What's nice is I think, okay, we've got the catalyst here very clearly. I'm going to give it one more minute to see if Najam comes in, because he was asking questions about the dollar yesterday and there wasn't anything clear, but I've got the penny sort of dropped in my mind last night, putting it all together of how to explain it for us all. All right, folks, let's get going with sort of nearly 3 minutes in. So, okay, here we go. Right, we just had a data drop, very strong GDP for the second quarter. I'll cover that in a minute, and strong jobless data. And we've had that big move in the dollar. It all makes sense, right? And if we look at just remind ourselves of the last Fed meeting, it's not that long ago. Remember how we said we saw GDP was higher than markets were expecting from the Fed, and inflation, right, was still at 2% and was not hitting target till 2028. And the interest rate expectation was, as markets were expecting, but at the short end of the curve. In other words, they're expecting 3 interest rate cuts, was the market, whereas the projection was that maybe they'd only say 2 interest rate cuts. So what we saw was that initial drop in the dollar because of the front end of the curve of the bond market, that there's more interest rate coming sooner. But look at the longer end of the curve, no change. And inflation is still at 2, not in target till 2028. So, and GDP, look, higher than markets are expecting. So broadly speaking, markets digested the data and said, okay, this means the Fed's higher for longer, right? That's really what the last minutes told us, but quicker interest rate cuts in the near term. So medium, longer term, same, but there's a risk that they're higher for longer. In the short term, more aggressive cuts. So that's why we saw the dollar drop and dollar gain, right? That's the narrative, right? So we saw, didn't we, the dollar gain, right, out of the Fed meeting on September the 7th. And we saw dollar yen, big hammer reversal, pushing higher. Okay, great. That all makes sense. Now, we've just had some significant data. Now, normally, that GDP, this is for the second quarter, right? We're now about to be going into the fourth quarter. So it's ancient history data, but look, 3.8%. So in other words, the US economy is stronger than markets are expecting. Previously 3.3, but now there's that 3.8% reading. And if you look at the GDP for 2025, okay, the Fed are seeing it in 1.6. So very strong reading, okay, and impacting expectations. Now look at the jobless data as well. Now, I was hearing rumors that that jobless data was going to be high again. If you look at and that's people claiming jobless benefits. Do you see here? Look, 218,000. So it's a strong labour market, and if the labour market's strong, the Fed don't have to cut. Okay, and if GDP is strong, they don't have to cut because everything's going tickety boo, as it were. Okay, that's the the sort of shorthand way of saying it. And now, if you look at current expectations, look, it's higher for longer further out. You see, we got higher for longer, and you got this sudden pip on the data. So that means higher for longer, stocks are dropping because interest rates are higher for longer, the dollar's gaining. So looking at all that, it means that tomorrow's PCE print is going to be really, really, really important. Okay, now I did just kind of a piece on LinkedIn. I'm going to send you the link for it, just because, right? You can look at that link there, and at your leisure, have a look at why the PCE data is really important for. But in essence, remember the Fed, if inflation is less of a problem, it means that they can cut interest rates more aggressively. So if this starts coming in at 2.4% or lower, then expect the dollar to bounce. There'll be a euro-dollar buy bias, gold buy bias intraday. Now, as it stood today, because of that hot data, there was...
Fed Scoresby says in the short term, what is most worrying is the risk that inflation rises persistently.
There was a euro-dollar sell buy. So I took a quick short on the euro-dollar pair, just scalping very quickly, and took a quick scalp just down to the big round number. You see the 1.1700? So just scalp down, hit the big round number and out, right? Nothing fancy, just want to enjoy a little bit of that dollar strength. So nice and straightforward.
Further says, still basically optimistic we are on the golden path with inflation coming down.
Now, the key thing for today is we have a whole draft of Fed speakers coming up. We've got Mirren has been at 115, Goolsby was at 120, we've got Williams and Schmidt speaking now at 2, Bowman at 3, Barr at 6, Logan at 640. So after Schmidt, right, we're gonna have Bowman at 3. Now, in terms of what they're all saying, now what we've got, the doves are Mirren, Bowman and Daly. Schmidt hasn't spoken since the FOMC. So Schmidt is more hawkish. Schmidt wants wants definitive data before cuts, and says current stance is only modestly restrictive. So Schmidt's likely to talk it up at 2, and Schmidt should be talking now. In fact, I'll just see what Schmidt is saying. I'm not in a hurry to cut interest rates. Fed's policy is slightly restrictive, right place to be. Going forward will be data dependent. Okay, so Schmidt just kind of said what you'd expect Schmidt to say. So now the next real one to look at is Bowman. And Bowman is more dovish. Bowman is worrying about labour market weakness. So what I would say is, if you just look at this, look what Bowman's just going to have seen, this really strong labour data. So if Bowman starts saying labour data is strong, then you can see some more dollar strength. But then it's going to be all the fuff, the sentiment today, then dissipates ready for the PCE tomorrow. So that's where we're at. We're in a buy the dollar frenzy now, sell stocks, buy the dollar. But at some point, there's going to be a reset. Let's see what the PCE is tomorrow. Does that make sense? That's the main look at things, right? Just seeing if there's anything else. SNB met, kept interest rates unchanged as expected. Doesn't seem to be anything, I think, major from the SNB really to note. Then just have a look around markets. You can see that stocks are selling off. That's going to help stocks sell off because the strong labour market out of the US and higher GDP means the Fed are in less hurry to cut rates. Negative stocks in line with that negative sentiment, and there's kind of a bit of a mood going around of sell stocks. It's just that kind of mood, everyone thinking, okay, is this the top in, so there's some kind of retracement. We'll see, but that's kind of the mood that's flushing around today. You got bond yields pushing up because why? It's higher for longer, right? And you got gold pushing lower, silver off its highs of its day, copper, all commodities just suffering from that stronger dollar. My copper longs working out very nicely, added to those today actually. Hey Najam, and then the Dixie moving up. Najam, I was just saying about why that dollar strength. Remember yesterday, I think there wasn't a macro driver. The bottom line is just really confirmed by that Q2 data we just had for the GDP. Usually Q2 would be ignored because we're nearly Q4, but it was above expectations. Jobs data really strong. Initial jobless claims below market's minimum expectations. I remember the expectations from the last Fed meeting. Everything's just a bit firmer. Inflation not hitting 2% till 2028. GDP a bit better. So that's what's just, and the data here just confirm that narrative, right? So dollar up, but all change for the PCE tomorrow. Now, my euro dollars, I obviously closed them yesterday. In terms of the trades I'm in, then we'll start looking at the charts. Oracle closed them out yesterday. Very pleased because that's opening underneath my entry price now, but just, yeah, that's nice. And my United Health longs closed out as well yesterday. Just with this negative sentiment, you kind of feel it around and you think, no, this is not the time to be long stocks. Just closing all my stock positions out. Euro dollar longs closed out. Still want to buy it, mind, okay? And remember, my big picture is this Trueflation index. This is meant to be mirroring live pricing in the US. It's at 2%. So I don't think inflation is as much as a problem as the Fed's fearing. And my logic for that, it's based on this Trueflation data. And if you look at its composition, you can see its composition here, and it's based on all these live market pricing. So that is my bias. I'm thinking inflation will be less of a problem than markets are thinking. So I'm waiting for the data to come in and to confirm that. So that's why I'm still got a medium-term euro-dollar buy bias. But you know, I'm not cutting my nose off to spite my face. And if you see a train coming, you get out of the way of it. So that's where I'm at. So flat now really across markets and just waiting for the next opportunity, apart from my copper longs, which are still going because that was more of a long-term position. I'll just put my long position here. You know, I'm in around roughly this point. Just bought in at this bottom, probably from a bit lower down actually. Nice support area, and just bought in. I'm just going to try and hold and see how far we can go with this. Maybe start trading it under swing points as we go. Remember, long term, structurally, see, I don't mind buying this in the medium term because structurally, there's not enough copper mines to meet all the copper demand that's expected to come into the world. So this big drop on Trump's copper tariff announcement, when that was sort of retracted, so this big move, but many investors are saying, well, okay, hang on, copper prices structurally have room to go higher.
On geopolitics, Israel does strike Yemen's Sana, according to Houthi press.
Right, so that's where we're at, folks. 3 o'clock next Fed speaker to be aware of. And let's have a look at stocks. So look at the ES. So hourly, first point to note, we're landing in a value area high. We're in the value area high, and it's also that value area low. So we're in this broad support area that you want to know. We get underneath this area, then we've got this run down to the 6645, the point of control from this week there. So that's where we're at there in terms of stocks in the hourly chart. Yes, I know. Yeah, Konstantinos, we all owe you a big clap. I took some of that short as well on that head and shoulders. For those of you who weren't here, Konstantinos pointed out this little beauty here. Left shoulder, right shoulder, right? Got the break, pull back, sell off. Beautiful, well done. Very nicely done. And also, do you see how the on-balance volume confirmed it, that breakout? So he got head and shoulders pattern, confirmed with the breakout, pull back, stop would have been over the shoulder, and away we went. Great stuff. A decent retracement, right? So well done, Konstantinos. Yeah, and thanks, Najam, for reminding us about that. I meant to bring that up, and that was lovely, and I did take that as well, so thank you. Right, where else are we at? Yeah, so on Delta, negative, building, but note, we're in a value area, support area. So just be aware, we're in a little bit of a support area, but momentum's clearly lower. 15-minute, we've been tailing action. We've got buyers trapped here against these levels. Look for sellers from the standard deviation. Delta's lower. If we start to see any sellers here, then I wouldn't be unreasonable to take a bit of a short. You can see here on the 5-minute, sellers, 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 and a bit of consolidation down at this level here. I'm gonna put this across. There's a lovely spot, very clean setup, beautiful looking. And the thing to note is just note when you get that, remember, like if you see a head and shoulders and you've got the on balance volume confirming it like this, that's a proxy for volume that we can use. Now we knew the volume anyway, but like if it's a different market, you can use that as a proxy for volume. All right. So coming up to the open, what do we got? Sellers trapping buyers there, looking for sellers against that standard deviation could give us another flush lower. I'm a bit reluctant really because of the support area here. So maybe have a look, but we've got a bit of bottoming, hit that area. If I get something very good against that level, then I could maybe sell it a little bit. But otherwise, really, I'd like something up into that level or ideally up at the VWAP. So we'll see where we get to when we get closer to the open. 5 minute, you've got buyers coming in trying to trap these sellers down here and trying to put in a near-term bottom. So we'll see how we get when we get going, see what the sentiment is. Looking at, let's move that there. And let's move stocks there. Exactly, yeah, this value area low. So we don't really want to be selling into that. And you can see that we're trying to put some support in there, which kind of makes sense. Selling from the VWAP, great. Here, look at it, but there doesn't really seem to be much room to go. Now, looking at the time price opportunity, clearly we're opening outside of value from yesterday. So the market is imbalanced, trending lower, fast trend. Right? On the 5 minute, see exactly the same, which is what I expect. And then when you look at the time price opportunity, you can see we're opening imbalanced from the Globex open. So market's imbalanced. S1 providing support for now. So keep your eyes on these levels here for good selling opportunities. That S1 1 hour high looks quite good as well. So that is here at the 6673. So 6673, great area for potentially shorting. All right, folks, and here you're going to get a little attempt here, probably a little sell-off. Sellers trapping buyers. If they trap them, you might get a little sell-off here. I'm not going to take it because of the location we're in, but just something to watch. You might get a little flush lower on that, but you see the buyers have trapped sellers, so it might be here and then bid back up. Right, 5 seconds. Right, let's see. Okay, sellers are still here. No, I didn't, Najam. Yeah, no, I didn't. I prefer it when I get like a central bank deviation generally, when there's particularly from the RBNZ, because they give their projections so far out into the future, it kind of gives you more confidence with the RBNZ. Right, so there we go. Let's have a look on the 15.
Coming up on the calendar in about 10 minutes time, we are looking out for remarks from Fed.
Aussie yen would have been the go-to pair yesterday. Here we go. Okay, so 15. Hello, let's have a look what's going on here.
In terms of format, unclear whether there's going to be a text release, but there is expected to be a Q&A.
All right. Right, delta is negative. On balance volume pushing higher. What do you reckon, folks here? How did you do with that, Najam? Did you run, how far down did you take that? Well done, by the way. I just missed my little pullback I was looking for. Oh, come on now, let's have a look. So those sellers, trap those buyers. This is an area to look for potential shorts. We're into that fair value gap as well. That's an S2 pivot point we're into here. So you could potentially see some sellers here. I just don't want to sell like in no man's land, so I'm just going to leave it. But that is a fair value gap. You can see that here. And you see the S2 pivot point, right? So we just touch that.
I didn't get that. Could you try again?
Go away, Siri, please.
Very disconcerting with Siri just randomly listening into your conversations. Yeah, nice. Yeah, well done. Great stuff. Right, that kind of made sense there. You see, because we went to that, you see, we hit that fair value gap here, right? So we moved up into it. And we sold off. Now, let's see. Take a little short, just see if I can get any underneath that. Just a little one. Like being back underneath this area. And get back under that point of control. Right, I'm out of it. Too slow. Just kind of going nowhere. We shall see. If we get a pullback and then another sell-off, it's just too sideways. Right. Right, okay, that's nice. If I can get back underneath, if I get back underneath this level, then that'll be my sell. So get underneath those buyers, then I'll be selling. Point of control, just holding. I want to sell, but I need to get underneath that point of control. So I've got a little bit of so selling, bit of a pullback. There we go. I'll try that as a little sell. Okay, added another position in. It's nice. Yeah, moving nicely down.
And now just about 1 minute to the top of the hour. Again, we are expecting remarks from Fed's Bowman. Unclear whether there will be a text release, but we are expecting a Q&A.
Just taking quick scalp off that level. Okay, now let's wait again.
So again, not too sure if we'll get remarks related to monetary policy or the US economy.
A little tricky. Just took a scalp into that bottom. Now let's just wait, see if we get something a bit different. 15-minute close coming up. Look for the break of that level. So underneath there. If you can get underneath these buyers again. If you go underneath those buyers. You see that 15-minute? That's a pin bar inside bar. So that's really key for like a breakout and a break lower. Delta is still negative. Just need to find a way into it, really.